Friday, September 20th, 2024, Monaco 64, home of alternative economics and contrarian views. Good morning, Clive.
Good morning, Mario. You must be a happy bunny with the price of gold where it is.
Well, yeah. I mean, it's good that I mean, it's only doing what I thought it would be doing for the last 20 years because politicians and central bankers, they always want to need to keep inflating more and more. And yeah, it's unfortunate though. It's kind of bittersweet because yes, we have protected our savings, but there are a lot out there who still don't understand what's going on. And in particular, this morning here, London time, Clive, we it's an inglorious day for the dollar. I think there's a good war movie called the Inglorious Bastards, weren't there? And it's just the opposite of glorious because the dollar is making a new all-time low versus gold uh, uh, at above, below 1/2608th of an ounce. But it's not just the dollar, it's also the Swiss franc. Where you are in Switzerland is the pound, even though the pound has strengthened a bit versus the dollar recently, we're still above 1950. And it's not a good sign. And so, yeah, just what's your view on what's going on, Clive, and that 50 basis point cut?
Um, so we've seen the Federal Reserve come in with the 50 basis point cut, which was the higher end of the expectations. I mean, there were only two choices in the market. One was for a 25 basis point cut, and one was for 50. So that's 0.5%. So they've cut interest rates by 0.5% to a new range of 4.75 to 5. That's the new range. The previous range was 5.25 to 5. As they lower interest rates, that makes the dollar seem less attractive compared with other currencies, and therefore the dollar currently is falling. And we can measure that if you want to look at specific exchange rates. You can look at the dollar against the Japanese yen or the British pound, it's falling. But the way most people look at it is against an index called the DXY. And I saw immediately after the speech by Jerome Powell that the DXY index had dropped by about 1.5%. It was down to about below 101. I don't know if it's gone below 100 yet today, but it wouldn't surprise me if it doesn't go below 100 in the coming days. A few weeks ago, it was somewhat higher. So the dollar is dropping. And the consequence of that is that the gold price is rising. But of course, a fall in interest rates is good for all assets, not just all assets except the currency itself. So what are we seeing? We're seeing the price of stocks rising. They've been rising very, very rapidly in the last day or two. It's a continuation of the melt up, which we talked about last year. Stocks are up, 17, 18% over the last year. The gold price is doing even better. So I think we're in a scenario where the currencies of the world, the dollar in particular, are losing their value and losing the value at a very fast pace. How fast could it get? Well, I'm not expecting this, but I just draw your attention to what happened in 1933 when the dollar in a single day dropped by something over 40%. This is not so it's not unknown for currencies to lurch by very significant percentages. I mean, another example of that was back in about 8 years ago when the Swiss franc lurched upwards by more than 25%, something like that. So we could have a lurch in the value of a currency like the dollar. And of course, that would create a lot of disruption in the marketplace because whenever these sorts of things do happen, there's always someone at the wrong end of it. And then we have a crisis because of the major bankruptcy or someone loses, there's an institution or a company somewhere which has lost money and it becomes the news story of the day. But yeah, I think the point is the dollar is likely to continue to decline against assets like gold.
Yeah, and you saw there the dollar index is just above 100. But the other one that we could look at is the price of gold. Let's divide it by the dollar index so we can see how gold's doing against the dollar index. And I think Gold's doing quite well as well. So that's quite interesting chart here, Clive. This is the price of gold versus the dollar index. That it's also making a new all-time high, barely here, as you can see. And let's go back. Yeah,
So
so
it
yeah,
looks like in 2011, it was about the same level as it is now.
yeah,
Um,
we're just
the
breaking.
gold was the same level, and now gold is now heading out to that level, and it's going to break out to a new high.
Yeah, so this is very bullish, not just for gold versus the dollar, but also for gold versus the currencies in the dollar index, which means, like you said, yeah, we're just going to see lo lower and lower currencies in real terms. And that's the problem nowadays, Clive. Most people think of gold as just a commodity, that it's not important. Uh, and I think a lot of people are gonna, yeah, because the Western financial system, they want people to stay in the currencies. They don't want people getting out of the boiling water, right? And just show you one that might interest you a bit more because you live in Switzerland. So that's the price. So even against the Swiss franc, which is considered one of the best fiat currencies, gold is about to break out. So there you go. Um, what else, Clive?
Um, Well, the government debt. I just put together, if I can share a screen here,
Yeah.
a little list of all the famous people who have expressed concern about the level of government debt,
Mm,
Mario. And I don't know if you can now see that on the screen,
yeah.
but you can see that we've got Alan Greenspan, Ben Bernanke, Jerome Powell, for example, who've said that the US debt is on an unsustainable path. Janet Yellen and of course a whole host of famous people. By the way, didn't construct this list myself. I got artificial intelligence ChatGPT to put the list together,
All right.
but so cheated a little bit there. But you've got the US Government Accountability Office warning that the federal debt is growing at a rate that threatens the vitality of our nation's economy and the safety and well-being of the American people. We have the Congressional Budget Office issuing reports expressing concern over the US's fiscal policy, warning that high debt levels could lead to decreased economic growth. And of course, we've got the rating agencies, Moody's and Standard and Poor's, who are cautioning that the debt levels are unsustainable. So we've got a whole. I'll just stop sharing that. I think anyone who wants to take a screenshot of it can do it now. So I come out of that.
Yeah, it's interesting that all those people who are warning about it, they made it possible, especially Alan Greenspan and
There's
Ben Bernanke and Janet Yellen, because if they hadn't done all the QE, they wouldn't have kept rates low, and the U.S. government wouldn't have been able to borrow as much. And Paul Ryan as well, he's part of the problem. He was a politician. It seems that.
former Speaker of the House, wasn't he?
Yeah, both sides of the aisle. And there are people who say, well, that debt has been growing for 40 years and there's no problem. But I think there is. And we're seeing right now with the dollar. Yes, you can keep printing, like Greenspan once said, we will never default because we can just print the money. But the money becomes worth less and less. And that's what a lot of people don't understand. I think they think that the fact that the dollar index is still around 100 and bond prices are going up is means that they can keep going, but they need to start measuring things in gold, in my opinion. And I might sound always a little bit too much about gold, but I do because it's uh, ultimately what the system measures everything against. And is it any wonder, Clive, that so many central banks outside the West are buying so much gold? I saw there's a tweet or headline yesterday about India. India imports 127 tons of gold in August. I mean, just in 1 month. That's a lot of gold.
Yeah, I've got just looking at that. The if you can see the screen I just shared. Uh,
Yeah.
are you there, Matt? Yep. Okay. So we can see that there's been some fairly large increases in the gold holdings over the last 12 months. China has, for example, has increased their gold holdings by very roughly 10%. Poland has increased their gold holdings by nearly 50%, or they nearly doubled them, in fact, to be honest. And Singapore, which we go down here, moving down a bit, where's Singapore on the list? There we are, Singapore. They've gone from they've increased their holding from whatever it was to 200 by 76 tons to 230 tons. So that's about a 30% increase they've done. So we've had some fairly significant increases in gold. And what's the reason why central banks are increasing their gold holdings? Well, the level of government debt has been increasing faster and faster, and the ratio of government debt to gold has gone out of sync. In other words, there isn't enough gold held by the central banks to deal with the level of or the increase in government debt that has existed over the last few decades. So central banks are having to go into the market, and there simply isn't enough gold to go around. They can't go in and willy-nilly buy gold and bring their gold levels up to the right level, because that would just explode the price of gold and also destroy the value of their currency. So they have to do it slowly and gently. So of course they're printing currency to buy gold, but they're not going to destroy the value of the currency by printing it all in one day, getting there to their normal holdings. It will take years and years to get there. So to give you an example, China, who's got 2,200 tons of gold, is one of the biggest countries in the world, whereas America has got 8,000 tons. So China's got a long way to go, and at the rate of 10% increases a year, it's going to it's going to take decades before they get even close to the level of gold that America's got. So I think the gold buying by the central banks continues, for mainly to try and catch up with the level of increase in government debt around the world.
Yeah, I would say that China has a lot more than 2,200, Clive. That's the official number. And
Yeah.
a lot of people like Yan Neuenhaus and many others in the gold space, they've done a lot of analysis of how China, one of the biggest gold, if not the biggest gold producer, they keep all their production, and they've calculated they probably have more like 30,000. And I would say I'm not really sure the US has 8,000, but like you said, I think they're going to keep buying. And I want to share a story here I saw from last week, and it was by Jan Neuenhaus. And I tried to get him on, but he couldn't make it to the live stream last Sunday. But he does a lot of analysis, and he's found that the Saudi central bank, they've been secretly buying gold in Switzerland for the last 2 years, 160 tons. And he's gone through all the import and export data to prove this. So I think that's what's happening as well, Clive. A lot of central banks, first, they don't want to drive the price too high because they want to get as much gold as they can for their dollars or whatever. And they don't want to antagonize the United States because having gold instead of fiat dollars is against the interest of the Americans. I mean, even Donald Trump said he's going to punish people that don't use the dollar. So to me, it seems like he's also anti-gold. But I think this is going to continue a lot. I haven't seen the mainstream media talk about this because I guess they want to keep it quiet. And Clive, you also said that a lot of central banks print their own currency to buy gold, and that's probably true. But a lot of them also, when they get foreign reserves, like from their exports, it comes in dollars, and they see that the dollar has been like trashed. So they're telling themselves, well, we're going to switch to gold, and gold as well. You can keep it at home, and no one can take it from you or sanction you with it or freeze your gold. I think that's the other reason.
Well, we're definitely moving into a world where there'll be more and more control and monitoring of the assets that you hold. That's coming for sure. And I think the central bank digital currency, which you and I do not like, I'm against it. I think it will come, and I think it will be another method of control of the population. And I think we'll get to a point down the line when the governments start to say, we need to know what people are doing because we have anti-terrorism laws, and the only way we can monitor everybody to make sure they're not buying drugs or engaging in terrorism or evading their taxes, perhaps, is by making sure that every transaction you do passes through the central bank digital currency wallet. So we don't have those yet, but they're coming. The central bank digital currency, CBDC as it's known, will be an electronic currency effectively issued by the government and controlled by the government through two types of wallets. You'll have your wallet in your phone and you'll have a wallet at your bank. So your bank will be looking after another wallet for you. And it's the equivalent or the virtual equivalent of cash in your pocket today. And you'll be able to convert your money at a ratio of 1 to 1. So your pounds will become pounds. They'll be called the same thing. They are the same thing effectively, but they're not really. But the pounds in your pocket or the pounds in your bank can be moved out of your bank account into your central bank digital currency wallet, and then they can be spent. But I think what's coming is the government's going to say, that's the only way you can spend money. That's the only way you can invest. That's the only way you can buy a house. So if you're going to buy a house, you have to pass the money from your bank to your bank's central bank digital or currency wallet, and then to the seller to his CBDC wallet. So we can know what's going on, so we can tax all the transactions effectively, so we can make sure that there's no terrorism or criminal activity going on. So when that happens, it'll mean there's a much greater oversight on everything you do. And that brings me to something I wanted to talk about, Mario. I don't know if this is a good moment to talk about the possibility that this might be used as the tool for what I'm going to call one kind of a currency reset.
Yeah, just before you start that though, you mentioned they want us in an electronic world, everything tracked, and it's a bit worrying, isn't it, Clive, that they can actually blow up all your electronic devices and kill you. We found out this week with what is happening in the Middle East, and I'm not going to say more about who's doing it because I don't want to get in trouble. But can the people that are doing this, they can't blow up gold and silver physical. They can't track you. That's another reason to have it. Yeah, so be careful with your iPhones and everything else, and you make sure you behave. Yeah, Clive, let's move into
Okay.
the topic that you mentioned there.
So we talked about the high levels of government debt, and the real problem with government debt in America, let's talk about America, is that the pace of increase of the government debt is approximately double the increase in the level of the economy. So the level of debt as a percentage of GDP is growing faster than GDP. It's getting bigger and bigger. And the Congressional Budget Office, their own projections see this getting to very unsustainable levels. Of course, it's already unsustainable, but even more unsustainable levels in the next few years. I think by we're 10 years out, we're at 166% of GDP, compared with the something like that people say it's 135. But if you look at the public, that is about 90, 99%, 98% at the moment of GDP. But that figure is growing faster than the economy. That's the problem. So what happens next to the level of government debt? Obviously, if it's unsustainable, all these important people and institutions have said it can't go on forever. How do we get out of it? Well, of course, one way, and the good way, would be to raise taxes so they don't, but without destroying the economy. But of course, raising taxes does usually slow the economy. People say, stuff this, I'm not going to go to work. Another way would be to cut the spending. But if you do that, you're going to have riots on the streets because the public at large are going to say, where's my handout? I'm entitled to this, I'm entitled to that. So that's not a very easy solution. There are some other solutions, and of course, and I'll come to what I'm going to talk about the reset in a minute. which I think some people might find attractive, but I don't. But one way out is to have high inflation. So you just continue to print money faster and faster, and the inflation rate goes up, and then it goes into hyperinflation, and eventually you just reissue the currency and start again. That's a sort of reset. Another way would be to bring in some capital controls where they tell you you can do this or you can't do this. Now, this could easily come if we have the central bank digital currency, where it'll be very, very easy to limit what you can do. You may, I remember, I don't know if you remember, Mario, but I remember in my early working days in the UK, back in the early 70s, it was illegal to do things with your pounds. For example, if you wanted to go on holiday, you took your passport along to a bank and they'd stamp the back of it with the maximum you were allowed, which was £50 to travel abroad at the time. So you couldn't go abroad with more than £50 because they worried you might take £150 and speculate it with it. So it was a crime to move your money offshore. And of course, you couldn't go and buy shares on foreign stock exchanges, or for that matter, very easily, gold. Another way which this might come to some sort of ending is what's called a bail-in, where they say, listen, we have basically too much debt. Nobody wants to lend us money, at least not at the rates we're willing to pay. So we're having a bail-in, and everybody who's got a bank account, everybody who's got some cash in a money market fund, sorry, but that's 90% of that is now lent to the government at 2%. And that's there's a lot of historical precedent for that in other countries. You're basically forced to lend your money to the government, and by the time you get it back 5 or 6 years from now, it'll be worth nothing. There are some rather negative scenarios out there, from revolution to civil war to outright war. Of course, they might have price controls or spending restrictions. But what I'm going to talk about is a way forward which might seem more acceptable to the government, and probably I would give it a 50% probability of happening. This is called a currency reset, and I'm going to call it a global currency reset, but it could start in any country like Japan or UK or Europe or USA in a moment of crisis. But the forerunner to this, I think, is still the central bank digital currency, which, whether we like it or not, is on its way. At some point, after the central bank digital currency is up and running, and people probably will find it very convenient to pay everything with their telephone, the government is going to say all transactions, for the reasons specified, money laundering, tax evasion, have to pass via your CBDC wallet. And then one day, we're in a bit of a crisis. People are buying all the toilet rolls in Tesco. There's nothing on the shelf or something like that. I mean, that's maybe a bit daft, but you can imagine there's a lot of civil unrest, or there's a crisis, or maybe there's a high inflation rate and people are buying up everything in the shop, and that we've become a nation of hoarders. So the government says we can't have that. So we're going to limit you as to how much you can put in your CBDC wallet, to £1,000, £10,000, £20,000, whatever their figure happens to be, so that you don't go and buy everything on the shelves and there's something left for others, or through your wallet, we control what you can spend your money on. And we certainly don't want you speculating against the pound or the dollar or the euro or the Japanese yen or whatever your currency is. So we're going to limit what you can actually do in capital transactions, just the way we had the exchange controls in the UK back in the early 70s and 60s. In other words, there's certain things you won't be able to do. So they're going to bottleneck how much of your money in your bank, you can put into your central bank digital currency wallet. And then at some point, they close that loophole temporarily, because we're in a crisis. There's been a situation, I can't say what it'd be. We don't know what the future holds, but there's always black swans around the corner.
Yeah, something Putin orchestrated or something, as he always.
Yes, it might be. It might be a pandemic. It might be a natural disaster.
Yeah.
There's all kinds of things you can imagine which might happen, and it'll probably be something we haven't even imagined. But because there's always things we haven't imagined happening. But at some point, there's a crisis. They'll use the crisis, whether it be a war or whatever, as the excuse to shut off your ability to convert money to your central bank digital wallet. So your So your old money. So now everything's going through the CBDC wallet. Your salary's coming into the CBDC wallet. Your pension's coming into the CBDC wallet. Your spending's going out of the CBDC wallet. But your old money is effectively undeployable. You can't use it. And what does it mean if it's undeployable? Well, it means over time it becomes worthless. To start with, the day you find its bottleneck, your old currency probably be trading at 70% of the dollar. And 3 months later, I'm guessing 20 cents of the dollar. And a year later, I'm guessing nobody will want your old currency at all, since they will have come to the view that this temporary restriction has become permanent. Now, why is that good for the government as a solution and potentially good for some individuals? Firstly, the government's debt is in US dollars or British pounds or Japanese yen, which is not the CBDC currency as such. Don't forget, the currency is convertible one to one. It's the same thing to all intents and purposes. That's how people see it. They'll see it as dollars and cents. Just as up until 1933, they saw gold, or rather, sorry, they saw dollars as 23.22 grams of gold, not grams, grains of gold. But after that date, it was only 13.71 grains of gold. But so dollars and cents, dollars and grains of gold, dollars and CBDC dollars. They'll be seen as the same thing until they're not.
Yeah, it's like in
So
the UK. Sorry to interrupt you. In 1971, the pound was changed as well. It used to be 240 pence, and then it became 100, and people just got used to it. But I'm sure a lot of people found out after that decimalization that things got a lot more expensive. But it's like a sleight of hand, right?
exactly, a sixpenny bar of chocolate was still 6 new pence when they brought in the new currency. But the bar of chocolate, although it got a little bit bigger, it didn't get 2.4 times as bigger. So, that was quite, I think they call that shrinkflation. And I also remember the penny jacks, which were little black licorice sweets you used to buy for an old penny. There was still a penny after the decimalization, as they call it, where they changed the number of pennies in a pound to 100. But let's step forward. How does this help the government? Well, the government debt is denominated in old dollars, and the whole economy is not running in old dollars. Now it's running on the new central bank digital currency. So the government can print as much money as it wants to pay off the national debt without affecting the economy in the slightest way, because effectively the debt to GDP ratio in the new dollar, or the CBDC, starts off as zero. And of course, they're going to have to bail out the pension funds and people who are hard done by this reset. So they'll probably take this debt to GDP ratio straight up to 7 or 8%. But that's nothing compared with today's 90 or today's 100% of debt to GDP. But how can this benefit individuals? Because it's a sort of debt jubilee, because many people who have debts, and that includes mortgages and credit card debt, will find their liabilities are left behind in the old currency unless their borrowing agreement has a currency reset clause. Mm. And I do hear from one American lawyer, I've been speaking to a lady, she tells me they're now putting in currency, or at least she is putting currency reset clauses into the borrowing agreements and rental agreements and mortgage agreements and things like that.
Wow.
So
That's quite amazing.
So if your borrowing agreement has got a currency reset clause, you can rest assured it will favor the lender, not you. But if it doesn't, you could be, unless they pass some legislation, you could be very lucky and find that your mortgage is left behind in a defunct currency. So effectively, you owe nothing.
Mm. Right, but one question: what would eventually happen to the old debt that's undeployable? Would they just like forget about it and write it off? But because that backs a lot of stuff like unfunded liabilities. I mean, I guess they could just like write it off, but it means that creditors, people who have bought government bonds or have the old currency, they lose out, and that's why it's so important to get out of government debt and currency, isn't it?
Absolutely, but it's not just those who own the government debt who are in trouble with this, although that's the most likely candidate to lose all its value. It's also those who own bonds of every description. So even if you happen to own Apple bonds, those bonds are undoubtedly issued in the currency of today, not the central bank digital currency. So if you have a maturing bond from Microsoft or Apple or Google or whoever it happens to be, and your bond pays off, it's going to pay off in the old dollars, which goes into your bank account, but you can't actually spend those old dollars. You can't convert them into the central bank digital currency. So to all intents and purposes, those kinds of assets are wiped out. Now, obviously, a debt destruction can be seen as very, very negative for the world because millions and millions of very rich institutions and people lose a lot of money. But there's an opportunity as well because it's a chance for the government to reflate because they can bring in the universal basic currency. They can bail out all those who are hard done by, the pensioners whose pension funds were wiped out because they held bonds in a now defunct currency. But the Americans are not going to bail out a Swiss pension fund or a UK pension fund who happens to hold a US government bond fund or a bond fund which is hedged back into pounds. They're not going to bail you out. The British government might, if you're in Britain and have a
Yeah.
pension fund.
So would you say the very, very wealthy who have a lot of financial assets have a lot to lose from this, I guess?
Yes, but also a lot to gain because the very wealthy, there's two sides to every coin. They don't own only cash and only bonds. They have diversified portfolios of equities and properties. And of course, all these things are going to be worth effectively infinity in the old currency. So it depends how you do your accounting. If you continue to measure your assets or your wealth in the old currency, you're going to be very pleased because you become richer than you've ever been before. If you're measuring it in the new currency, unfortunately, the price of everything is going to look like it's lower than it was before because there's less money on the planet. So it
Yeah.
depends how you measure it. But
Mhm.
certainly those who have tangible assets, they will still own those tangible assets. If you own a bar of chocolate, you'll still own a bar of
Yeah.
chocolate. And that the same applies to everything else that's tangible. So, but if you happen to own a bond or a money market fund, unless you qualify for some sort of bailout because your the amount of assets you got there is very low. And by the way, the man in the street, 95% of the population will see themselves all right. It's the 5% who are really going to suffer at that wipeout level or the debt jubilee level. Oh, sorry, the debt jubilee is for the borrowers, the man in the street. But the debt jubilee will cause the top 5% to lose a lot of their cash. And this is not just individuals, it's institutions like pension funds. And then, of course, the question will be to what extent does each government step in and bail out their internal pension funds? Of course, the question will be what happens to other things like rental agreements. Um, my expectation is laws will be passed to ensure that rental agreements become payable in the new currency at an equivalent rate. They may pass a law to say your mortgage gets converted, may not. I mean, it depends on the situation. I mean, there's been many instances, and you've cited some in the past, where people have gone through effectively a very high inflation or a currency reset and had the good luck to have their debts left behind in the defunct currency. The reunification of Germany was one of those where they partially converted the old mortgages in East Germany to Western marks, but partially it was effectively left behind. So East Germans did have a benefit net by having borrowed money. So what happens to contracts? Well, if you have a contract to buy a machine and you have to pay 6 or 12 months down the line, well, you're going to be paying effectively in now a defunct currency, unless there's a currency reset clause in that agreement. And don't forget, if there are currency reset clauses written by the lawyers, those currency reset clauses will favor the lender. They won't favor the borrower. So if you're a borrower and you've got something with no currency reset clause, you're probably on very good grounds at the moment. But I think these kind of clauses are going to find their way into contracts more and more. So you need to look very carefully if you're a borrower to try and get that struck out if you can.
And one important question for us here in the community, how do you think gold and silver would do? I mean, they would become priceless, I would say, in a reset. And would a reset also help bring down asset prices like houses and everything else in terms of purchasing power? Because right now, everything is so unaffordable for a lot of people.
As we go through the currency reset, the price of everything will be rising rapidly. They won't have a currency reset at a time when inflation is 2%. That's not likely. There's no need for that. The only need for it is when the confidence in the currency has been lost and there's a panic going on, and you're saying, I've got to get down to the shops to buy something, anything, because whatever I buy will retain its value. So that's the kind of situation where they're going to do a reset. So before this happens, the price of gold, houses, equities will be rising very, very rapidly, as will the prices of hard goods like tools or exercise machines or even holidays. It doesn't really matter what we're talking about. Things will be rising in price rapidly. But after the reset, we're going to effectively have a new currency. So the price of what you earn in the old currency will now be effectively infinity. But in the new currency, it could be anything. It depends on how much of the new currency is used to bail out people. But in all probability, there'll be less of the new currency in existence than there was of the old currency, much, much less. And therefore, the price of everything in the new currency will be considerably lower. But you can't, or you won't be allowed to profit by saying, I'll convert all my money to the central bank digital currency on day one, so that when it happens, I've got the same amount of the new currency as the old currency, because they're going to put restrictions on that for sure, and they won't be allowed to have more than a certain amount anyway.
Yeah, I think we looked into the Bank of England. They did a year or two ago. They came out with a report for Britcoin, and they speculated on their report that it would take a few years to bring it about, bring it in. They don't want to bring it out um, all at once. They were going to phase it in, but they said something about a 20,000 pound limit. So.
Yeah, I mean, they actually said, Britain said, there will be a limit as to how much of the central bank digital currency you're allowed to hold. We haven't decided yet. And then a number of people said
Yeah,
it might be 10,000, twenty
yeah.
thousand, depending on somebody. One of the proponents, I forget who it was, said that £20,000 should be more than enough for anybody, I believe, because almost nobody earns that much a monthly.
Yeah, probably it was Andrew Bailey or someone like that. But the thing is, well, yeah, Clive and I are not for a central bank digital currency. And I would say because it's going to be something for controlling you. And they could bring UBI with it as well, for universal basic income for people who can't get by. But it's a possibility. I think it might not work because people might ask the question, if you ruined the previous system, how can we trust you to run the next system? But I would note as well, Clive, that this is not political. It seems to be across all political, uh, you know, uh, divides, because even Donald Trump, I see that he's pushing for a digital currency. It might not be a central bank one, but it could be a government digital currency. And I think that's just as bad. I think the free market should decide what it wants to use as money, and then currencies evolve as some kind of making things easier and more, how can I say, convenient. Uh, People started out using this, a little gold piece or nuggets to exchange, and then they minted their own coins, and then the government got involved in minting coins, and then people found out that if they just wrote a receipt for that coin, they didn't have to carry the coin around. So it's always the market that develops this, and I think that's the best way forward. but I'm sure they're going to try something that is centralized and that comes from the government.
In Switzerland here, we've obtained the necessary number of votes to have a referendum on the subject of the central bank digital currency. We don't have the wording of the referendum yet because they haven't announced a date for it, but it sounds like it's not going to be a question of whether we'll have a central bank digital currency. It'll be more a question of a requirement, a legal requirement on the government to keep cash in circulation at the same time. Um, I think that's interesting, but I suppose the reality is over time, the use of cash will fade away.
Yeah, no, that's probably right. And people will use more electronic devices and mechanisms. And of course, we'll be in danger of blowing up. But Clive, yeah, I was thinking this morning when I was walking Rudy, a year or even well, 9 months ago, or people kept saying, "Oh, gold is too expensive at 2000. I'm gonna wait." And now we're at 2600, and I think there's still gonna be people who are gonna keep saying that. And I don't think we are in a phase where the public finally wakes up and rushes in and drives it up. So I think it's still early days. What do you think?
Well, one of your listeners wrote to me yesterday to ask. He hasn't bought his gold, and he's saying, "What I'm waiting for to buy on a dip. What do you think the chances are that it could get down to 1,900 or slightly below?" And I said, "Well, top of the head, I'm going to give it a 15% probability." But
Hmm.
then I ran it through the Monte Carlo simulation, and the
Oh,
probability came out at 0.1%. I 1 in 1,000 chance will get down to below 1900, which would be roughly a 25% drop. But the chance of having a 25% increase over the next year was put at something like 21%. So
okay.
210 times more likely to rise by 25% over the next year than falling by 25% was what the Monte Carlo simulation is telling me. Now, of course, that's just a simulation. It's not going to necessarily work out like that. And you've always got the black swan events. But I think the probability of the gold price falling substantially is quite low. There's a bit of a race on by the central banks to acquire gold. They need to have more gold because they don't have enough gold relative to the size of their GDP. They don't have enough gold relative to the size of their debt. And I think they're all, many of them are probably surreptitiously acquiring gold, and they want to have the gold representing a larger proportion of their reserves going forwards. So I think that basically is underpinning gold. I don't know where it's underpinned at. 6 months ago, I would have said it's probably not going to go below 2000. But now I think we passed 2,600 this morning. So where's the bottom line? Maybe it's 2,500. We might get a dip down to that. Maybe 2,300. I don't know. But I wouldn't be betting on it myself.
Yeah, and that's why I've always said that you need to buy or exchange your fiat for gold whenever you can. Try to dollar cost average as much as possible. But there's also silver, Clive, which is still really undervalued versus gold. So if you can't afford or you think gold is too expensive, I mean, silver is still at 31 bucks right now this morning. So there you go, Clive. We're gonna wrap
There,
it.
there's my there's
Oh,
my silver bar, which I most
all
recently
right.
purchased. It's 100 grams,
Oh,
and
great.
it's what they call poured gold. You can see
Yeah.
it's got the rounded edges.
Yeah, I guess the premium for those are a bit lower than for the coins.
Yeah, you're always going to pay the
Yeah,
VAT, and you're also going to pay the dealer spread, which might be another 10%.
yeah.
So yes.
Great, Clive. Any final words, or maybe you can tell the viewer, the new followers and viewers, where they can connect with you, and yeah,
So I'm more than happy, free of charge, to answer any questions from your viewers who want to write to me via LinkedIn. It's the only way I communicate. Anyone who asks me to go to WhatsApp will be blocked, and anyone who says, "Hi, Mr. Clive, how are you?" will not get a reply. But if you've got a sensible question, like what's the price of gold tomorrow, I'll attempt to give you an answer, but no investment advice. But before I go, Mary, I just want to stress what I talked about the currency reset here. It is just one of a number of scenarios. It's one which I do give 50% probability to, but there are many other scenarios out there, how we get to the end of this government debt problem. So it's not like I'm forecasting this will definitely happen. And I can't guarantee that there'll be a debt jubilee for everybody, but I think this is a possible scenario and a way it may play out.
Yeah, maybe we can talk about that at another time. Yeah, that's a good point. And so with that, I'm gonna wish you, Clive, and the viewers a great day and a great weekend.
Thanks. Bye bye, Mario.
Bye, Clive.
Bye bye, viewers.